Good afternoon, ladies and gentlemen. Manifold Capital Partners here, bringing you a triple trade portfolio on a few different securities. Manifold Capital Partners is the only proprietary trading firm using a CFD platform and also traditional platforms as well too, should you choose. Anyways, let's get started here. We're going to be looking at Yahoo right now. As you can see, we started off with 1,000 shares in a long position right over there at 36.54 is our average cost. And in this video, we're going to take on 3 positions. We are going to use 3 positions to utilize maximum potential profit. Now, I want to make it clear that we are trading approximately around 3:30 in the afternoon. It is not the appropriate time to be trading a triple trade portfolio, as you would know that there's only really a half an hour left in the trading day. The volume is a little bit more excited. You got a lot more different types of emotions being played over here. So with that in mind, we are going to go in this triple trade training video. We're going to show you how to manage a triple trade. We're going to show you how to add in and how to actually scale out of a position. The key to a triple trade is not actually winning. Winning is easy. When you see something going up, you tend to hang on to it. It's when to cut out the losing trade and add that money to the winning trade. And that's the key important thing here, is adding money to the winning trade and cutting out the losses. And a lot of people would think that that system is kind of biased, but not true. As you can see right now, we're losing about unrealized minus $30 in our Yahoo position. And right now we're looking at the Facebook chart here. Here's the 1 minute of Facebook. And as you can see my mouse scrolling back and forth, I'm really clicking and taking a look at all my indicators, and that's it. I'm going to be looking at 1,000 shares here. Here we go. And we just went short on Facebook. Okay, 1,000 shares is 74.63. So now we've got 2 positions open over here. We have a Facebook 1,000 share allotment short, and we have a Yahoo 1,000 share allotment long. We'll be looking for a third. If we find a third, it doesn't necessarily mean we have to, but we could play these 2 as a pair, or we can go on. Now let's take a look at Apple. If you notice, I'm taking a look at this social media, tech, sexy stocks over here right now. They tend to move in different directions. So you'll notice Apple being a computer hardware company or consumer hardware company, they'll move different from a social media site, and then another media site will move different from the other social media site depending on who likes what. It's a very, very good way to get 3 different types of trading at the same time. Cut out the losing one fast. That's the key. The winning scenario in a triple trade is when to cut out the losing one the quickest. And here we go. We'll just take a look quickly over here. There's our third position added. It is Apple. Okay, it's an average cost of $98.32, and we're in that 1,000 shares. So if you take a look at the value over here, $98,000 for Apple, $74,000 for Facebook, and $36,000 for Yahoo. You can do all of these trades for as little as a $7,000 to $10,000 deposit on our platform. You will not get that anywhere else ever. In North America, we are the only ones to be able to do that. You cannot get this kind of leverage anywhere. It's plain and simple. And we do not even need any short list to cover our Facebook, or we don't need any liquidity, because on the CFD platform we are not actually borrowing the shares, but we are actually betting against the share. And that's the difference. More information on that at manifoldcapitalpartners.com, and you can find everything you need over there. Meanwhile, let's get back to the trade. Facebook is up 30, Yahoo is down 50, and Apple is down 20. Nothing really to worry about here right now. Everything seems to be working, just being in what we call stalemate right now. We do not have any winning positions. The video itself that I'm showing you today was a trade that was done today, and at the same time I did not know the outcome, and nor do I care what the outcome is. As a matter of fact, if this outcome is a losing scenario, we will show how traders can get out of a losing scenario quickly, efficiently, and properly. Remember, capital preservation is the biggest key to trading. If a store owner doesn't have any jeans to sell, he won't be actually in business. If a shopkeeper doesn't have any milk to sell, he won't be in business. That's his inventory, and a trader's inventory is his cash, his buying power. So you have to preserve it. You have to always have it to stay in business. So you can only have a trade go against you for so long until you cut it off, and that's the key. So let's take a look over here again. We're looking at the Yahoo 1 minute. We're taking a look at Siri. Just taking a look at anything else over here that if we want to click out something, we want to add something. We're taking a look at Microsoft, at the other tech and software companies, just to see how it is relatively compared with our other positions. And I'm really just taking a look at what's going on over here. That's all I'm doing. I'm taking a look at the 50-minute of Microsoft. And on my other screen, I'm comparing it to the S&P 500. Is it melting candle formation right now, as Microsoft is? And that's it. So let's take a look at what's going on elsewhere. If you take a look at the melting candle formations on Microsoft itself, it's a straight line. Will it stay like that on the 5-minute? Will it stay like that on the 2-minute? And I'm just taking a look at seeing what's happening with others in the trend. Back to our account manager here. If you see the unrealized portfolio of $140 on Apple, negative, and Facebook up 50, and Yahoo down 60. Okay, nothing too much to worry about right now, and we'll see how far this will go. There's no reason to do anything hasty at the moment. We are waiting, and waiting is one of the biggest positions in trading. And at Manifold Capital Partners, we stress that. Every trader should stress that. Every tutor, trader, mentor, waiting is the actual cheapest position and the most hardest position to conquer. It's the one you have to master. And as soon as you can master the position of waiting, the more successful you're likely to be as a trader. Okay, Yahoo 1 minute, we're taking a look, and it's a long position on 1,000 shares, and so far we're still okay with that. We're taking a look at Apple here in the 1 minute, and it's a long position, and we're okay with that as well at the moment. It's coming off a sort of resistance. It's stacked up at the $98.27 mark, $98.26. So we really have some sort of position over there where there's a median of buyers and sellers, and it looks like the sellers are as less as the buyers. As you can take a look, it's 98.26 is stacked up. There's many more buyers than there are sellers, and that should give us a strong indication that we can hang on to this positions thus far. And coming along, we'll just take a look and see what else is happening here. And you really have to watch these positions. As you can see how the stack is bigger than the 24s, 25s. I want it back up to 26. And you see the ask, there's only one price there for 27. This is showing me that it's going to be moving higher. Facebook, on the other hand, we're not sure. We're in a short position. It should be short, but it looks like it's coming off the bottom of a engulfing candle there. Which is just beside the 15:15 time mark. So it looks like that may not go well for us. And back over here to Apple again on the 1 minute. And Apple looks like it wants to come off there. Facebook again, here we go. We have, we're not sure really yet right now. I'm a little bit iffy on Facebook. Take a look at Yahoo. Yahoo seems to be taking off its 20 SMA. So we're quite happy. We're quite happy with the Yahoo. We're quite happy with Apple right now. It looks like some, but this Facebook one doesn't seem to be going our way. In this video, I'll be clicking back and forth between these three positions randomly, and just to take a look at what's happening. And that's one of the key things here. Now, many of you will say, why don't I have 3 other windows open with Apple, Yahoo, and Facebook so I can look at them all at the same time? Good question. I have 3 screens and they're on the other side, and I am looking at them. But I'm trying to teach people and trying to show people how to manage it just even with one screen. It's very easy. You take a look at the price action mark and you'll be all right. So here we are with the Apple 1 minute, and it looks like it's going to recover off there. Yahoo on the 1 minute. We have an engulfing volume candle down over there, and it looks like it'll come off that 20, so we're okay with that. The stack is there at 36.48. as you can see, and there's big buyers in there, big, you know, 2,700, 1,400, 1,900, 1,300, 1,700. Those sizes are, as you see, is 16, 25. Those represent in hundreds. And here we go with Yahoo on the 2 minute. 2 minutes is a very good indicator. 1 minute is too fast for some people and they don't like the action, but if you could take a look at the 2 minute, it's actually behaving very well. So we're still happy. Facebook, not quite sure. It just doesn't want to. It just doesn't want to break that low in there. Apple. Here we go. It's still acting quite well right now. All three of our positions, as you can see, is sort of a stalemate right now. So that's why I am not adding anything, nor am I cutting off anything. Any one of these positions can go the other way at any time. And Apple looks like at this very moment that it wants to actually take out of its little $98 mark over here. And here's Facebook again. We're going to close down Facebook at a loss. As you can see, that a candle engulfing here out of that melting candle formation, we're out. Very simple. We didn't like it. We cut it off. We lost 40 bucks. We're going to take that money and add another 1,000 shares to Apple. You see that? Lost $40. Okay, in the trip trade, minus 40 in my account right now. Took out that bad money and added 1,000 shares to Apple because Apple was performing better. And that's the key, folks. If we had 1,000 shares in Facebook and it was not a good position, then why not take the same buying power and put it to something that's actually doing better? Now, as you can see, our average cost at Apple is $98.30 now, a little bit lower. We didn't average down. We didn't add to a losing position in Apple. No, that was not the case. Okay, so we never averaged down. What we did was we cut it off and we went into the good. Melting candle formation broken with an upside green candle on Yahoo. There it is. Okay, we're going to add to that 1,000 shares. And there you have it. We have 2,000 shares in Yahoo and 2,000 shares in Apple. Okay, we scaled into these positions. We didn't average down. There's a big difference. Scaling into a position is taking a certain portion of your buying power and adding it in. And as it's going your right way, add in more as you see fit. Averaging down, which is never a good thing to do, is trying to buy something cheaper and cheaper and cheaper, hoping that it just goes back up a fraction of what it went down and recouping your losses. And that is the wrong way to trade. And here we go. As you can see, Apple wants to break out of this 98.35, 98.32 hump over here. And it's strong, and now it's doing well. We are up $60. Okay. Let's take a look at Yahoo. And Yahoo wants to do the same. As you notice, Yahoo's and Apple's chart patterns are almost the same. They're stepping up and they're breaking out over their hump. You can see that line there. There's big stacks of buyers in Apple, 98.32, 98.33. It's going our way and we're quite happy. Okay, folks, if you take a look at the time in sales, it's all green, hardly any reds. And even the white ones, which is in between the bid and ask, is good because it's not going to go down. Here's Yahoo. It's all green on the time and sales for buying. Okay, 36.54. Big stacks. Big stacks of sellers too, mind you, on the ask. But when you have big stacks of sellers and the buyers can swallow them, the price really moves up really fast. So it's kind of a vice versa scenario. Okay, so we're taking a look over here. We're probably going to scalp something off here very soon after this breakout. Remind you folks that it is almost at the end of the day, so whatever profits we may have, we will take very fast because we don't want the market to go against us and come out. So here we are. We're coming up to a better sized profit here on Apple. The stacks are bigger than the sellers. It's visually you can see it. 98.37 is a bigger than the 98.38s. That's so visual, you could see. And that's what makes a stock move up. More buyers than sellers. And that's what makes the stock move down. More sellers than buyers. Here we go, 160 at Apple. 180. Okay, closing it out, so we'll take that money. Yahoo, we'll take that as well too. And here you are. We take the Yahoo profit. We covered our $40 minus. We're up $250 right now. Thank you very much for enjoying, and I hope you enjoyed this triple trade at Manifold.